Massive changes just hit the mortgage world again. We were getting tons and tons of changes and nuggets if you guys have not been paying attention or following along. But this time, Bill Poultry came out on social media, announced that he is going to shake up the mortgage world because he's been talking about credit. If you don't know, because you don't live in our world, he is trying to figure out how to make homes affordable, bring costs down, the cost for a credit report, which is outrageous, down. But another thing he's doing is saying the way we look at credit, as you and I know, it doesn't really make much sense anymore. So they just rolled out VantageScore 4.0 in addition to FICO scores. So sounds like a game changer, right? Well, yes and no. Let's break it down what this really means and how this affects lenders, buyers in the future of credit scoring and mortgage lending. So basically, Bill Poultry just came out and announces, like he does a lot of things. And so what happened is he blindsided a lot of the industry because a lot of people, there wasn't like a heads up or, hey, I'm going to do this. It was kind of like, hey, we can accept VantageScore 4.0 alongside FICO when underwriting loans for Fannie and Freddie. Sounds like we're opening the door to lower credit costs and more flexibles for borrowers. But here's the truth. While this is a big policy move, the actual rollout is a bit of a mess. Why? Because he just rolled it out so fast. Oh, by the way, real quick, if we've never met, my name is Kenny Simpson. I focus on 1 to 4 unit financing. That means I help people buy and refinance 1 to 4 unit properties, whether you're a first-time home buyer, self-employed, VA, FHA, or experienced real estate investor, I can help you out. And I shoot videos like this. No, it's for free, so I can help educate you, the consumer, of what's going on with this crazy world we live in and how this all breaks down and matters to real estate, mortgage rates, getting a mortgage, and try to educate you on what's going on. So if you ever need me, description below, please reach out anytime. Love to connect. Anyways, back to the video because that's really why you're here. So despite the announcement, just like a lot of things, like they announced crypto, they're going to accept that, and you're going to hear them announcing and rolling out lots of things. It still has to get implemented. It has to get swallowed. It's just not that easy. So in our world, just because you change something doesn't mean at the lender level can just figure it out, underwrite it, and change it. Yes, we want to make a policy, but some are slower to roll out because some want to make sure they train their staff properly and understand it. And people like me have to come out here, read about it, learn about it, and educate you on the process, which we really don't know everything, just like the crypto stuff. So lenders still have to pull the Tri-Merge report from Experian, Equifax, and Fed Union. Like, you know, we pull now those 3 scores. You might have a 700, 720, 680. Those we always use the middle of the lower. So if it's a husband and wife, in the middle score of the two, the lowest one, we're going to use that. That's just how it works. Why? I don't make up the rules. Do I agree with how credit reports work, by the way? No, I don't, because you could have an 800 credit score and somehow, some way, you miss a $20 payment because you're traveling in Europe or somewhere else, and your score went from 800 to freaking 700 with one miss, and you never missed a payment in 30 years, and then you're going to get judged at that moment in time when you get a mortgage. Is it total bullshit? I 100% agree, but maybe things like this, we're moving forward to a better direction with this. All bureaus still price VantageScore just as high as FICO, so lenders are excited about it, but there's no savings right now. Even credit bureaus were caught off guard by this move, which tells you how rushed and uncoordinated this rollout is. It's still unclear whether lenders are going to actually adopt this rollout, when this is going to be, is there more cost burden and all that. So the problem is our role, we have certain systems, technology, and things like that we use. So when you change credit scores, guidelines, and how we do things, it's a problem because, for example, we take your file, a loan application that you fill out, we put it in a system, we upload it into DULP, Fannie, Freddie Mac, and it basically, it looks at your credit, looks at your income, assets, all that. You kind of underwrite your 1003, and then based on that, it spits out an answer saying, you know, approval, denial, refer caution, things like that. Those are also built in that model. The other thing is how do we price loans based off of this new FICO model, VantageScore? Well, I don't know yet, so I can't give you that answer. So for example, if you're a lender and you've got to ask, is a 680 Vantage really the same as a 680 FICO? Right? Until those conversations and guidelines are put into play, we really don't know yet. So what would be the long-term effect of this? Like, what is the point of going from the regular FICO score to the Vantage? Look, first of all, I think credit scores should be looked at over a period of time and not just like a moment of time. Meaning, like, when you get a credit report, whatever it is, if you have an 800 and you missed that $20 payment like I told you, because it does happen to the best of us, that rating should not ding your score. What it should say is, hey, this person just missed this, but we look back 20 years, 10 years, whatever it is, they've never missed anything. So this is not going to affect them. It would be differently if it's like, hey, they give you a little grace period. So if maybe you missed 3 things at one time, they're like, we're not going to give you the grace period. So I just, I don't know all the technicality and all the details into this, but that is something I hope we move towards, because punishing people, boom, right off the bat with credit is crazy. So let's just zoom out and look long term and how this is a great step. So FICO has had a monopoly on the mortgage lending for decades, which I can't stand. Literally, when you used to pull a mortgage score, I think it cost you as a borrower, I can't remember back in the day when I was business, $15, $20. It's like almost $100 for a score. And then if you have some type of late payment or something we need to get off and do a rapid rescore, it can cost hundreds of dollars. They are, sorry to say it, the FICO, where we grab and pull your credit, they are ripping people off, raping people. They know it. Everybody knows it. Bill Poultry knows it. There's nothing we can do because they pretty much, there's a contract in place. They have the monopoly on it. It's absolutely insane. Nobody agrees with it, but we have to live with it for now. Adding VantageScore and introduces competition, which is great. So hopefully this will lead to better pricing, more access to credit, and moderate risk scoring. But that's down the road. The FHFA originally gave GSEs until late 2025 jump onto this. So the go live moment is really more of a political flex than actually reality. What should you do with this information? Don't overpromise anything to your buyers about credit scoring changes still in transitions, right? Educate yourself and your team on VantageScore's work and how it compares to FICO and could affect LLPs. I'm reading off this screen here real quick. Watch for updates from your credit report provider, LOS vendors, because so basically what it's saying is, folks, right now is we made an announcement. We need to go out and educate ourselves first in an industry of how we implement this, what this really means. And then we have to go out just like I am today and educating you as a consumer. So hopefully at the end of the day, what this is going to create is more competition. It's going to make the FICO scores come down, and really how they look at credit overall. I'm hoping they're going to look at it much differently. Like I said, you don't get penalized for one thing. They look more of history and they score you differently. Why this is a good thing is because we're going to bring in more competition, more competitiveness in the market. So maybe just the traditional score will not work or penalize you. And also the VantageScore can bring in things that are not on your credit, like rent payments, maybe car payment, not car payments, like cell phone payments, things like that are not on your credit score. We can bring it on the credit score, looks at that, factors that in. Because there's some people that just have a lack of credit, right? I talked to a client this week, has a 680. The 680 is just merely because she has a lack of credit. And so they're not getting the benefit of, hey, I made rent payment for 10 years. I made a cell phone payment for 7 years. I made my health insurance on time for 10 years. Whatever it is, we should be able to bring those things into it. Why does that have to be, student loans, a credit card, a car payment, things like that? It shouldn't just be one, this is the path forward we do it. So anyways, guys, I just want to jump on, tell you about the credit score. Why I'm excited, why I want to announce is because clearly you're going to see a lot out of this new president of FHFA, Bill Poultry. He is going to focus on trying to make mortgages easier, deal with all the BS and nonsense, deregulate this stuff because it's overregulated. He's also going to start working on trying to how we can get interest rates down. He's going to be focusing on really trying to make it easier and more cost effective for the consumer to get a loan. And he'll be focusing on with interest rates. He'll be focusing on hopefully lowering low level price adjustments. He'll be focusing on this new credit score, stuff like this. He'll be focusing on trying to get costs down for credit scores, maybe fees and things like that when you do a loan. Maybe when you refi, there's title and escrow. Maybe there's a way to grab data from these title companies and it's cheaper to get that stuff done. Whatever. We just need to bring down the cost of things to make it more cost effective whether you're buying or refinancing from a lender standpoint. And then if we come out and we figure out how to do this, the rest of the industry kind of follows suit where it goes to everybody else. So at the end of the day, right now, credit scores are the same, but they're going to introduce this, and hopefully this will help people that don't have all that credit or had crappy credit. They can bring on some of those other payments like I mentioned to help get their score up. And hopefully at the end of the day, instead of a credit score being $90, whatever it is, which is ridiculous, we would go back to more reasonable levels because there's no reason a credit score should cost $90, let alone like $50. I think a credit score should cost, $15, $20. The data's there. We have AI. I think it's simpler. I just think these companies are making and overcharging us. And it's like within the mortgage space, it's like we have massive inflation on credit reports. Anyways, guys, if I can ever help you, please reach out. I'd love to connect, and I'm always here for you. And whether you have have mortgage question, real estate question, and anything else. And if you want to learn more about me, check out my bio, check out my stuff, follow me on Instagram. We always put out a lot of great news. I think I'm one of the best locations, places to go when it comes to real estate news, what's going on in the market, teaching and training you about all the programs that are out there that we focus on here, and also trying to get you in the mindset of becoming a buyer, becoming a homeowner, and what to expect, and hope to hear from you soon.